Okay, so you know how sometimes like you hear things about the economy and it makes you a little uneasy?
Yeah.
Like you want to understand what's happening, but more importantly, what you can do about it.
Right.
If that's you, then you are in the right place. We are all about being informed and proactive, and that's what this deep dive is all about.
Yeah, there's just so much out there, so many opinions about potential economic shifts. We want to help you cut through all that noise and just give you some practical steps you can actually take that'll really make a difference.
Absolutely. Today, we are taking a look at preparing for a possible recession in the U.S.
Ah,
And we have some really smart material here that breaks this down. It goes through the key areas to focus on.
yeah,
Our mission here is simple. We want to extract the most important strategies and knowledge from this so that you can feel secure and in control no matter what happens with the economy.
exactly.
The big question is, what can you actually do right now to feel more prepared for a potential downturn?
Yeah.
Let's find out.
Okay, so the material here starts with this really fundamental aspect of being financially well,
Uh-huh.
and that is building a strong financial foundation. Think of this like your base camp, to weather any kind of storm.
Exactly. And the first thing it brings up is the good old emergency fund.
Right.
It says to aim for 3 to 6 months of essential living expenses.
Yeah.
So that's money tucked away.
Yeah.
It's more than just having money in the bank.
Yeah.
It's about that peace of mind.
Yeah, definitely. And I think a lot of people don't realize this, but historical data suggests that if you look at past recessions, the average length of unemployment often falls right within this range.
Oh, wow.
So having that buffer can be the difference between weathering a storm and having to make big changes right away.
Makes sense. And I also like how they recommend keeping this money in a high-yield savings account.
Oh, for sure.
That way it's easily accessible when you need it,
Yeah.
but it's still earning a little bit more than just sitting in a regular account.
Exactly. You want to make sure your money is working for you, even when it's just sitting there for a rainy day.
Makes total sense. Okay, so next up, we've got reducing high-interest debt.
Mm.
So things like credit cards, certain kinds of loans.
Yeah.
The connection is pretty clear. Less interest eating away at your money means more flexibility, especially if your income isn't as stable.
Right.
Have you heard of like the snowball and avalanche methods for this?
Oh, yeah, those are popular strategies. So with the snowball method, you focus on paying off your smallest debts first,
Yeah.
even if they don't have the highest interest rates. And the idea is that you get this quick win, it motivates you to keep going.
I like that psychological aspect of it.
Yeah, for sure. Now the avalanche method is more about tackling the debts with the highest interest rates first.
Makes sense.
So you end up saving more money in the long run because you're minimizing the total interest you pay.
It's interesting how they both approach the same problem from such different angles.
Absolutely. Ultimately, it comes down to what works best for you, what motivates you to stay on track.
Totally. And then we get to a step that maybe isn't as exciting, but it is super important.
Oh, yeah. I know what you're going to say.
Looking at your budget,
Yeah.
auditing it, really seeing where your money is going,
So important.
and finding those non-essential expenses you can maybe cut back on.
Right.
Like, are you
Mm-hmm.
really using all those streaming subscriptions?
Yeah.
Could you maybe eat out a little less?
Yeah, even small things like making coffee at home instead of buying it every day can add up.
Oh, yeah, definitely. And they even suggest using budgeting apps like Mint or YNL to get a clear picture of your spending.
Those can be super helpful. It's amazing how often we have these little leaks in our spending that we don't even realize until we see them laid out.
Totally. And then you can make more conscious choices about how you're spending your money rather than just letting it happen. Have you ever used a budgeting app?
I haven't, but I've heard great things. I know a lot of people who swear by them. I'm more of a spreadsheet person myself. Old school.
Oh, that's cool too.
Yeah,
I guess whatever method works for you is the best one.
exactly. As long as you're tracking your spending somehow.
Okay, so we've talked about building a solid financial foundation.
Right.
Next, the guide moves on to safeguarding your income,
Mm.
which feels particularly relevant now because job security can be a concern when the economy is uncertain.
Yeah, for sure. And this section starts with strengthening your position in your current job,
Right.
and it suggests two main approaches.
Okay.
The first one is upskilling. So that's like acquiring new certifications, taking relevant courses, basically anything you can do to enhance your skills and knowledge.
Makes sense.
And the second approach is volunteering for critical projects at work.
Uh-huh.
The idea behind both of these is to basically make yourself as valuable as possible to your employer.
I like that. Become indispensable.
Exactly. If there are any workforce reductions, you want to be the person they can't afford to lose.
Absolutely.
Mhm.
And they also highlight the importance of networking,
Networking is huge.
both within your company and externally.
Yes.
It's about expanding your visibility, your potential future opportunities.
Yeah,
You never know when those relationships you build could open doors.
I totally agree. And it's not just about finding a new job if you lose yours. It's also
Mhm.
about staying informed about your industry, what's happening, what the challenges and opportunities are, and just having that support system of other professionals around you.
That makes sense. And then there's this really interesting idea of diversifying your income
Yeah,
streams.
I love this.
It talks about exploring side hustles, things like freelancing, tutoring, maybe doing gig work, even finding ways to monetize a hobby you already have.
Right.
And it also mentions passive income sources,
Yeah.
like rental properties, dividend-paying investments.
Mm-hmm.
It's like having multiple safety nets instead of just one.
Exactly. Relying solely on a single source of income can be really risky.
Right.
But if you have those extra streams, even if they're small at first, they can really help if your main income gets disrupted.
Yeah. And passive income, while it usually takes some work to set up, can eventually provide you with ongoing income without you having to be as actively involved.
Exactly. It's about creating systems that work for you even when you're not working on them directly.
I like that. Okay, so the last point in this safeguarding income section is something most people don't think about until they need it.
Oh, what's that?
They say to research your state's unemployment benefits,
Oh, that's smart.
like understanding the eligibility requirements, how long those benefits last. It's not fun to think about, but having that knowledge beforehand can be really helpful.
Absolutely. It's about removing that fear of the unknown.
Right.
And it just emphasizes this bigger theme of taking control of what you can control.
I like that. It's about being proactive.
Yep.
Okay, so let's shift gears now and talk about investments during a potential recession.
All right.
This is a big one for a lot of people. It can be pretty anxiety-inducing.
Yeah, it definitely can. And the first piece of advice the guide offers is super important. Don't panic sell.
Okay.
When the market takes a dip, it's natural to want to get out,
Right.
but resist that urge. Market fluctuations are normal.
Uh-huh.
And historically, the best approach has been to stay invested. If you have a well-diversified, long-term portfolio, things like index funds and ETFs,
Right.
you ride out those waves and eventually the market recovers.
It's much easier said than done, though.
It is. But trying to time the market is incredibly difficult.
Yeah.
Most people end up buying high and selling low, which is the opposite of what you want.
Makes sense. And diversification is key here, too, right?
Absolutely. Don't put all your eggs in one basket. Spread your investments across different asset classes. So don't just focus on tech stocks, for example.
Uh-huh.
Consider things like energy, real estate, different sectors that tend to perform differently in various economic conditions.
Right. So if one area is down, another might be doing okay.
Exactly. You're mitigating your risk.
The guide also mentions rebalancing your portfolio to be a little more conservative, maybe shifting some of your holdings from stocks to bonds or cash equivalents.
Yeah, that's about managing your risk tolerance. As you get closer to retirement, or if you just generally prefer a less volatile portfolio, it can be a good idea to gradually move some of your assets to more conservative options.
But there's a balance there, right? You don't want to become too conservative too early.
Exactly. You still want to allow for growth potential. It's about finding that sweet spot for your individual situation.
And they also recommend looking into sectors that tend to be more resilient during downturns.
Oh yeah, like what?
Things like healthcare, utilities, consumer staples,
Right.
because people still need those goods and services no matter what the economy is doing.
Exactly. People will always need medication, electricity, and basic food supplies.
Do you think about that in your own investment strategy?
I do. It's important to have a mix of different types of investments.
Makes sense. And lastly, for investments, the guide really stresses having some cash readily available.
Yeah.
We talked about the emergency fund,
Hmm.
but this is also about being able to take advantage of opportunities that might come up.
Uh-huh.
If the market drops significantly, there might be a chance to buy undervalued assets.
Right.
Having cash on hand means you can act quickly.
Exactly. Market downturns can actually create some great buying opportunities for long-term investors.
Okay, so moving on. The next section is all about protecting your essential expenses.
All right.
This is about those day-to-day things that keep your life running smoothly.
Makes sense.
They recommend locking in fixed interest rates on any big purchases you're planning,
Oh, yeah.
like a house or a car.
Uh-huh.
That way you're not affected by potential interest rate increases.
Right, you have that predictability. You know exactly what your monthly payments will be.
Exactly. They also talk about the importance of reviewing your insurance coverage.
Oh, yeah, that's a big one.
So health insurance, life insurance, disability insurance, making sure you have enough coverage to protect you and your family.
Insurance is your safety net, especially during uncertain times.
And they also mention renters or homeowners insurance.
Right, to protect your physical belongings.
Right. It's about having that peace of mind, knowing you're covered if something unexpected happens.
Yeah, those kinds of things can really set you back financially, especially during an economic downturn.
Okay, so now we're getting into the mindset and practical adjustment section.
All right.
I think this is just as important as the financial steps.
It is. It's about how we approach these situations mentally and what we can do in our everyday lives to feel more prepared.
Exactly. So the guide suggests considering whether you can delay any non-urgent big expenses,
Oh, yeah.
like major home renovations or a big career break.
Mm-hmm.
It's about not taking on those big financial commitments when there's already some uncertainty.
Makes sense. Why add extra stress if you don't have to?
Right. And they also recommend gradually building up a little stockpile of non-perishable food items, medications, household supplies. It's not about hoarding, but it's about having a little buffer so you're not as affected by potential price increases or supply chain issues.
Right. It's just about being practical and having those essentials on hand.
Exactly. And it can really reduce anxiety knowing you have those things taken care of.
Definitely.
The guide also talks about staying informed about economic news, but avoiding going overboard.
Oh, yeah. The doom scrolling.
Exactly.
Yeah.
You want to be informed, but you don't want to be constantly bombarded with negativity.
Right. It can be overwhelming and lead to making impulsive decisions.
Exactly. Be mindful of how much news you're consuming.
And make sure you're getting your information from reliable sources.
Absolutely. And this last point in this section is so important. Focus on what you can control.
Oh, yeah. That's a good one.
When it comes to something as big as the economy, it can feel like you have no power.
Right.
But you do have control over your own spending habits, your efforts to learn new skills, the steps you take to prepare financially.
I love that. Focusing on those things can make you feel so much more empowered.
Totally. Okay, so the last section of the guide is about leveraging community resources.
Okay.
This is a really interesting perspective.
Yeah, sometimes it's easy to forget about these things.
Right. It points out that a lot of communities have support networks. Things like food banks, utility assistance programs, community grants.
Right.
These can be lifesavers if you're struggling financially.
Absolutely. And they also talk about the importance of strengthening those social connections.
Right.
Helping your neighbors, maybe bartering skills, participating in mutual aid groups.
Yeah, it's about collective resilience.
Exactly. We're all in this together.
Do you feel connected to your own community?
I do. I think it's so important to cultivate those relationships. It makes the community stronger and more resilient as a whole.
I agree. So as we wrap up this deep dive, it's clear that preparing for a possible recession isn't about predicting the future perfectly.
Right.
It's about taking steps now to be more resilient, more in control of your own financial well-being.
Exactly. Recessions are a part of the economic cycle. It's not a matter of if, it's a matter of when.
And this guide really emphasizes that preparation is key. Don't wait until things get bad to start thinking about these things.
I agree. Panic never leads to good decisions.
So just to recap some of the key things you can do. Build your savings, work on reducing that high-interest debt, and look for ways to diversify your income.
Yeah, those are some great starting points.
And it's important to remember that even though economic downturns can be challenging, they can also present some unexpected opportunities.
That's a good point.
Maybe there's a chance to invest in something that's undervalued, or to explore a new career path that emerges as things change.
Yeah, it's all about perspective, maintaining that adaptability and keeping that long-term vision.
Absolutely. So as you think about all this, here's one last thought for you.
Okay.
What's one small but concrete step you can take today to feel a little more prepared, a little more financially secure? Maybe it's looking into a high-yield savings account or taking a look at those recurring subscriptions you have.
Yeah.
It doesn't have to be a huge thing, but taking that one step can make a difference. It's about moving in the right direction.
Exactly. It's about taking control and feeling empowered.
If you found this discussion informative, please like, subscribe, and share this channel to get daily discussions on a current economic topic.